Not that tired. How was your week? You managed to catch some good moves? Well done. Well done. All right, guys. So, hello once again. My name is Yordan for the guys that I see here for the first time. The way Friday sessions work, basically we're covering the week, the plans that we had, what worked, what didn't, how things developed, what is left for the next week, few trades from the softwares and the strategies that we use in the club as well. That's basically the whole idea. Done. Fantastic. Pound yen, to be honest, for me was not that clear. I didn't trade it. But if you managed to catch it, well done. Patience is the key, isn't it? Attacking at the right time, having the right tools, and get a profit. All right. So let's start. Let's start with SRS, guys. Just a few trades. When did the week begin? 5th? Yeah. So anything above this point is basically what we were looking for. Well, the first one, Canadian, first attempt here that failed. Okay, that was a lovely trade. Double wave. And you know what we're doing in SRS, guys, right? We're basically looking for ABCD. Why is this yellow? ABCD patterns or a double wave, and then we want to connect it, to connect the lows or the highs, looking for divergence ideally, and then we're attacking with the trend lines. So that's basically the idea. This one pushed lower, couldn't find here the profits, and unfortunately it took the stops. Euro on the first wave that we were looking for. Okay, so basically that would be the trend line, break above, tiny pullback, and that was the attack. And basically the idea here was, well, double wave on the 4-hour charts, and then if we get the breakouts, we're looking for continuation lower, and so on and so forth. Triple B, we also had some good and some bad trades. Of course, you can go ahead and find all of them at vladimirribakov.com, and here under my strategies and courses, you'll see my products performance. This is where you can find all of the strategies that we're using right here, and you can go ahead and check out all of the trades that were taken, well, basically during the entire period. So now let's go back to the charts and the manual trading. Euro dollar, first one. Now you know what Vlad was looking for. That was basically the double wave, divergence, breakout, and continuation. In my opinion, that was a bit more aggressive simply because we had this possible divergence here on weekly chart, which more or less puts bullish pressure. And that's why the trading here, in my opinion, should have been done conservatively. We also said that buys could be provided from the bouncing of the price from the 4-hour chart right here, and aggressive buys would be failing here. We first of all said that we have divergence with not an ideal high, still more or less correct, but that was not the best and ideal corrective pattern. Either way, we got the convergence, and this is where stop loss would have been triggered. Of course, if you protected below the zones, that would still clear your stop. So If you try the buys, this is a no-go, a loss realized here. Then for the sells, we got the breakout below, we got break and close below the previous lows. And for me, the previous lows were these two, pretty close to each other. But the idea is that this candle showed a lot of bearish pressure. Together with the 4-hour chart, that was the bearish plan. Traded only with the pullbacks, and this is the pullback that we got towards the previous breakout. So this is basically first attempt for the price to break the trend line. Okay, rejection, spike above, continuation lower, and we got the retest. This retest is also coming with the dash trend line here that we have. Okay, and this trend line, so basically that's the retest zone of the broken trend line. We got the spike and then continuation lower. That being said, okay, I believe now the pressure would be remaining bearish, at least as long as we're above 113. So that would be the best place, in my opinion, to cash out positions. Of course, we are going to check for divergences on the lower time frames, if anything against moving stop loss, etc., etc., etc. Next one on the list is Dorian. Okay, this pair basically remains bullish, and you know the idea. I'm following for some time. That's basically this channel. After the bounce from the bottom of it, I remain bullish. This is the last high to be reached. If we reach it, very likely we're going to see divergence there, but again, that's still too far away as for now. In other words, we can still look for pullbacks and then continuations up. Okay, false convergence is now in play. That means from around this zone we can expect strong bearish momentum to appear. Okay, and once that completes itself, we can then be looking, of course, if there are setups. If we just see the price falling without any signs of reversal, we cannot trade it. Okay, but once we get signs for this continuation up, we can start looking for the buys. Those would be the two levels I will be looking for. This is the first one, and that's more or less the second one. Why this level? Because this is where the last divergence appeared, and this is the middle point of this divergence, and we have price action. Next, we have the previous one, which is the false break with the spike, and this is also matching the trend line together with all these highs and the lows here. So basically, that's the second zone. So something like that or triple doesn't really matter, as long as this zone right here is holding without breakouts, without momentum to form. Bullish continuation should be a good idea, in my opinion. Euro yen, rejecting the 100 levels we were discussing yesterday. Basically, the idea was pretty simple: break above, holding above it, and this is where we can expect the price to continue higher, reach 161.8 and then pullbacks. Or if it breaks below, that means we can start getting the corrections I'm expecting to see. I know that looks a bit scary, and I know that might be looking like a perfect opportunity for the sales, and in the short term it could be. Me, however, personally, I'm preferring to stay with the buys for a few reasons. We have a channel or a range, dynamic one. Last time we bounced from it, we're seeing the push up. That means as long as this low is holding, or a bit more conservative, as long as this zone right here is holding, which is the channel basically, okay, the bottom buffer zone of this channel, I would be expecting for the price to continue higher. So basically something like this. No divergences on the daily chart against 4-hour chart, already providing bullish hidden divergence from this spike right here. as you can see, and we have one more which is a bit more aggressive because we don't have the MACD histogram, and that's basically the idea. So pullbacks and possible continuations up on the 1 hour chart. Momentum is very strong. It doesn't look like it's stopping anywhere now, and that would mean we can expect a deeper correction. We have levels on the way. We have no divergence yet confirming this hidden divergence, so short-term pullbacks in this kind of form would be something I would be considering for the buys. If you're already in a sell, okay, as Vlad is, then look for these divergences to form against you and you can start cashing out. Of course, if you already have your risk-reward ratios, consider it as a profit and just put some money in the pocket and make the trade risk-free. Okay, so that's about euro yen. Next one on the list, euro pound. We're still looking, I'm still looking for this aggressive buys. Of course, we're in a very strong bearish momentum. The reason why I started looking for the buys is very simple. This is the last double wave. We're almost reaching the 100%, which means we can still play, create false breaks and then bounce. And we're also at the bottom of a weekly range. Okay, there is potential bullish divergence that is about to form here, and all that tells me that it's time to cash out the sells if any are left and start looking for possible buys. If that daily candle closes like that, will you take the bullish engulfing candle long or too aggressive? That's not bullish engulfing. Where do you see bullish engulfing? This one? For me, engulfing is when it engulfs the whole candle, not only the body. Even the range, what do you mean by the range? This zone? Well, I don't think the bodies are enough. That could have been a harami, but it's not a harami because the body is too small. So that's not a candle pattern, in my opinion, a reliable candle pattern for this daily divergence, even if it closes as it is and it gives a tick up. I mean, it could work, but it is a bit more aggressive. What I would be doing is, if the divergence is completed, simply wait for higher highs to be created, even if it's on the 1 hour chart. This time we're lucky because we have beautiful highs that we can easily differentiate, right? So that's the last one. You have, I don't know how many false breaks on the way and double bottom here, and they all come with divergences. So definitely looking for some kind of pressure, but don't forget this is euro pound, and euro pound tends to do this kind of things. And it's very possible that we're going to get it very fast again. But if we do, that's perfectly fine. No problem with me. All right. So to make long story short, guys, we have a trend line. We have the highs, basically higher highs to be formed, pullbacks, and then looking for these continuations. Of course, keep in mind this is aggressive trade because we're currently in a bearish momentum and we're trying to trade pullbacks. Okay, that's why I would like to do it as conservative as possible, meaning let the first leg develop, give me hidden divergence. Okay, now I know at least on the 1 hour chart I am in bullish mode and I can start looking for the buys, which is still aggressive. I repeat that and focus on that so you guys act according with your risk. Euro pound daily, looking at the wave structure, it looks like the second leg down is not complete. This leg you mean? Or this leg? This one, right? The last one. why do you believe it's not complete? Not symmetrical compared to the first one. Well, in my book, it looks pretty good. I mean, if symmetry is the thing you're looking for, I think it's fine. But again, the bigger reason, okay, that has more weight on that is the level post possible divergence. That counts more for me. And of course, the 100% zone is almost reached. And that's why we said, let it first develop the first leg hidden and then attack here, because as this leg is not actually touched, and as the weekly chart still has the spikes lower, okay, we can go ahead and test here these spikes below the red line, we might get pushes lower. And that's why conservative. Okay. All right. You're welcome. Dollar cut, euro yen. What do we have? Euro pound, dollar cut. Well, dollar cut reached the invalidation zone. My idea was to look for possible breakouts to the downside for the reason of multiple fall breaks, lower lows created divergences. This trend line was tested multiple times for a false break to form, and that did not happen. And that's why I told you guys I'd prefer to see the price creating the lower lows, gives the pullbacks, and only then attack it. Because attacking here, it's more or less a gamble, at least for the sells. You don't know whether it's going to bounce or continue lower, and in that case, it bounced. Okay, so for those of you following Vlad's idea for buys, if you did find yourself a spot to enter, well done. For me personally, the buys here, I don't see any entry possibilities. Not sure if anyone traded it, because there is no double wave, there's basically nothing. I don't know, maybe step trading here with this kind of protection could work. Okay, but for me, not really tradable for the buys. And you know that if I have a double scenario, I'm going to share it with you for possible ideas, but in this case, not really. Unless it was based on some software, yes, but for manual, not really. Not really. I think it was simply not providing a setup. So no trigger for the sells, invalidation was reached, and that means game over for the sells. We continue trading inside this channel. Okay, price is now pushing higher. Weekly chart has all the reasons now that we broke, in my opinion, considering the hidden divergence before that, to push towards this high, which is basically the top of this range, the big one. So dollar cut now turns into bullish for me as well. And if we get some good setups, meaning with pullbacks and continuation, I would be looking for these buys, but at the moment, neutral for me. Okay. Dollar franc. The idea yesterday was we have a double wave, okay, and we're in a bullish momentum. However, we started creating lower lows, okay, we started creating momentum here, and that's the only reason why we said we're looking for the sells if they would be delivered, which it didn't happen. And we also said that since this is a double wave in a bullish trend, it would make sense to go for the buys. However, the biggest reason for me not to go for buys is, first of all, the lack of divergence between the ABCD, actually between the B and D points. Okay, right here, no divergence. And second of all, breakout, stop loss, top, or the swing high, together with magnet zone. So it wouldn't make any sense in terms of risk-reward ratio. Okay, that's how it looks. 2 risk, 1 reward. So why would I go ahead and trade it, right? I think that creating a spike above, completing some sort of divergence or double top might be the trigger for continuation lower. Okay, and all that comes from the idea that we have a fantastic level. As long as this level is holding, I remain bearish. No need to go and look for buys at that stage. If, however, this level is broken and that zone is broken right here, that's around 1007, 7 or 8. Okay, then pullbacks for continuation towards the next levels and those spikes would make sense. At this stage, we basically have resistance and the price is here. So no need to buy, right? We need to see that and buy here if we're going to buy at all. So now we are still remaining with bearish plan. Then we have pound franc. Level is still holding. Okay, bearish plan is still valid as long as there are no breakouts above. That's the whole idea. This is where it all starts from. This is the daily chart. We have 2 levels here, and we have 1 cycle here as well. Level cycles, I need to change the definition of that word in the dictionary. Sorry guys, I tend to make this mistake a lot, so please bear with me when I say levels instead of cycles. So 3 cycles, more or less, coming to the same zone. You can see how the price simply stopped. Okay, this is amazing move up. We have extreme. Basically, my idea is to get pullbacks from this level. Okay, and then possible continuation to the upside. We have a nice trend line here to follow. We also have the daily possible divergence. So we definitely need to see some kind of pullbacks, maybe even break below, who knows. But let's first of all focus on this bearish move that we're expecting. Okay, so that remains valid, still correct. Let's see if we can get anything or not. For our chart, by the way, 1 leg divergence, which is superb. We can expect it again. Another confirmation here. Cut franc, the plan also remains the same. Now there is a possibility for us to move the level slightly lower. So basically we have high, 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 and probably a new high to be forming here. How do we know if this new high would be the new high or not? If we see another bounce from this trend line, then that's pretty much the new high we're looking for. Okay. Currently, there is again hidden divergence which formed, and we can expect the price to push lower. Break below this low, for me, is not going to trigger any sales. Just to make that clear, I'm looking for buys, and buys only because price is trading inside this, first of all, horizontal range, second of all, some kind of triangle, and this is where the trend line meets the price slightly above. So basically that would be the idea, and also of course to complete some kind of 5-wave structure or a cycle, and also the divergence, and that would be basically my plan. Short-term bullish, a bit longer term, mid-term, possible bearish bounce. Of course, we need to see whether this thing is going to hold or not, right? Like we had it here. We were looking for the bounces. It simply, boom, broke above, and now we're expecting the continuation. That's cut franc. So basically no major updates, just make sure to update the low, the high, if that would be valid. Pound cut, not really gaining the momentum I'm looking for, and actually managed to form here hidden divergence. You see that? Excuse me. So no one like divergences, no anything like this. That for me means it is very possible that we're going to see one more clearance above the zone, divergence possibly to be formed, and then looking for the sells. That would be the ideal plan and the ideal scenario. Again, we do have a fantastic level at the moment, those two lines that I mark here. This is the zone that we need to see holding, and if not, and if we see a breakout with momentum, then the pullbacks are going to provide us with the buys. So basically, guys, it all begins with the level. You have a level, which is resistance or support. If you have divergences below, okay, then you're looking for the bounces. If there are no divergences, you're looking for breakouts, pullbacks, and then the attack. That's it. Very, 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 very simple. Let me see what else do we have here. Kiwi. Where's the Kiwi? Right there. Beautiful, isn't it? Fantastic push up. Pair is moving. We have momentum. Breakouts of the levels we were looking for. And this is a classical situation of exactly what I just mentioned just now. You have a zone where you're expecting divergences and bounces as long as you have divergence here, right? On the lower time frames. It fails to gain the momentum down, it breaks above, you see the momentum, and this is the kind of breakouts we want to trade. Okay, not this, and then, is it going to continue or not? And you have no momentum here, and it becomes tricky. These kind of moves are pretty obvious. So you see how many candles you're holding above it, okay? In other words, we're looking for these pullbacks to deliver a bullish setup. Now, I think it was Claudine who spotted that in the Delta group when we were discussing it, so let's cover it once again. There is a first wave of pullback already with divergence. Okay, and I believe we had something on the 15-minute chart. Yes, we do. Here. So technically speaking, that would be a correct setup with a breakout to continue higher. And that might work simply because the momentum is extremely strong. But this is where you need to figure out whether you want to be conservative or aggressive. When the price reverses the first time, okay, first leg that is going to create, well, this one didn't create the hidden divergence, but we basically look for the first leg, which if it creates, so you have bearish, a reversal, first leg, hidden divergence, and then you can go ahead and attack it. Why? Because this is the first leg of the newly developing trend. We're expecting this to be leg number 1. We have 3, 4, and 5, okay, to be impulsive move. When the trend has been developing for some time now, okay, relying on one leg only type of corrections with hidden divergence becomes, at least for me, a bit more trickier. So my idea here would be, even if the price breaks above, where is that here? Even if it breaks above, in order to continue lower and create some kind of double wave, to trade it here, not here. Again, I might be wrong, I might miss it if it works, okay, but I prefer to be more conservative only because of that. Another reason is we have the middle leg, which is supposed to deliver 50% correction, and that 50% is pretty far away at the moment. Another reason is that this is the breakout, so those are the highs, this is the trend line, and that basically becomes the breakout zone. That zone was not retested. And again, we come to the idea of double wave, which makes a lot of sense then to be attacked. Clear? Okay, I'll accept the silence as a sign of clear. That is clear. All right, so that's about Kiwi. Next we have on the list is Kiwi dollar, Aussie dollar. Pretty much same story. However, this time we do have divergence right here. Okay, this divergence, where is that 1 hour chart? False break number 1, false break number 2. Okay, and that double top or false break, call it as you wish, is a wonderful situation where you can start looking for divergence attacks, guys. Why? Because this divergence is confirmed on the higher time frames, meaning 4 hour chart. We do have a level starting here with the spike and the closing bars, right? And we do have a magnet zone which is slightly higher. So I believe we're going to deliver something like this at the end of the day. And these short-term pullbacks are ideal for sales first of all, and then looking for buys. Sales, in my opinion, only with divergences. In that case, because the room down is kind of limited. Okay, we get into levels pretty quickly. That means if I want to trade leg number 1, pullbacks, leg number 2, this leg might not have enough room to give me enough profits in terms of risk reward ratio and bounce from it immediately. Okay, and that's why when you have such situations with 2 false break, higher time frame divergence, lower time frame divergence, it's best to attack immediately, because even if you lose, you risk small, right? But if you win, you know that you're catching the absolute top, so 0.3% risk, for example, could become 1% profit, because the risk reward is amazing. And then you don't care about whether this is going to be 1 leg or 2 legs. You can let it develop. Okay, cash out once you got 1 to 2 immediately, and then continue. Now, these kind of setups don't usually work. For example, you get this candle to complete the divergence. Well, obviously, this is not very helpful for us when it comes to divergences. Unless we trade the pullback, the risk reward is not going to worth it. Okay, so that's about Aussie dollar. Expecting probably 1 more push lower, even though hidden divergence is already developing, and we have some kind of continuing divergence here. But let's see how it goes. Important part is divergences do pay off. Now 1 more, and then possibly lower again. Aussie Kiwi is the next on the list. This one is again falling asleep. A really annoying pair. It moves, and then 3 weeks we're just waiting. So basically, after the last move we got, my idea would be to look for the buys. I do expect to see 1 more push lower, to be honest. That's the first zone, slightly higher. So basically, wherever the rectangle is. So either like this or like that. That would be basically the idea. Okay. Daily chart and this is why I believe we're going to move lower. Daily chart is now breaking the possible divergence. RSI is breaking the divergence, only the histogram is showing divergence. That means pullbacks and one more lower is very likely to happen. Okay, and of course the first signs for reversal will come from the divergence on the MAs. Second and third sign or fourth sign will be trendline breakouts, higher highs, hidden divergences, etc., etc., etc. At that stage, bearish it is. Kiwi franc, it simply cannot stop moving. We are in an extreme, and we have reached another level yet. Right, so this time 161.8 is below us, and if you can find yourself a setup that makes sense towards this zone here, which is approximately 100 pips below, to trade possible pullbacks, in my opinion, it would make sense. Why? Because it is in absolutely extreme conditions, and if something like that happens, for example, we can be looking for the pullbacks. Of course, we need to have a risk-reward ratio on our side. This level is absolutely amazing, and it's pretty clear what is happening, and that's easy to be identified. That's 66.99, basically 0.67, the round number. So that could be a very good idea for us to trade in between the Fibos and then switching for possible buy continuation up. Where to? Now we're following the dynamic resistance from the highs. Okay. Yordan, can you remind me if you take divergence signal only on the MACD histogram, even if the MAs don't support that? Yes, I would, but only when it comes to trendline trading in a trend. In other words, bearish trend, okay, and this is where we get double wave. This is where we get histogram divergence and a trend line. This I would trade. Histogram alone, very, very rare. Okay, very, very rare. Stephanie, yes, sure, we can cover it. So that's Kiwi franc. Let's see what else I have on the list. Aussie yen. This pair is fantastic. I love it. Clear waves, clear moves. Now we started getting the divergence here and here. This one not there yet. Broke above, created higher highs, created the convergence on daily as well, broke the trend line, and we were basically analyzing it from that point. So, in other words, look for pullbacks and continuations. Easy to read, nothing against pullbacks and continuations, guys. That's all I can say. Okay. Aussie cat. Now this one is one of my favorite pairs for pullbacks because we have multiple things coming to the same place. So first of all, level based on three other levels, triple magnet zone. Okay. Then we have the daily convergence, of course, which we said not really reliable. It's only higher highs, but no convergence before that. And then we have 4-hour chart divergence, and then we have cycles, and then if we manage to break one more time the highs, and now I'm going to drop to the 1-hour chart, we're going to get here, was that first false break, second false break, and again that's not fantastic because of the pullbacks we had before that, but bottom line is pair is trying to create, the price is trying to create higher highs, and it's failing to gain the momentum. You create higher highs here, and you see the push. Okay, that's how the trend develops. Higher highs push. Here is the vice versa. Attempting to break, fail. Attempting to break, fail. And look at the MACD. And look at RSI. And level. So the optimal scenario is, again, we get one more push, even if it's a strong push up like this, that would be lovely, and then attack it. Okay, very tiny risk. This is Aussie cat, guys. It tends to just move even though we have the divergences now, but once it all starts to fit together, once we have an extreme, time to start the attacks for the divergences. Why is my Telegram open? Sorry about that. That's about Aussie cat. Basically, that's the level. Let's see if we can get the sales from there. Kiwi cat, looking for deeper pullbacks. Okay, this is another pair which rarely gives nice pullbacks. Majority of the time is this. Okay, but I simply don't feel comfortable trading this kind of setups. No divergence yet, that means continuation. Higher hidden divergence is already in place, dropping down to the lower time frames. We have divergence, and break above would mean convergence, but that's more or less aggressive to me. So if you're going to trade this kind of setup, tiny risk, okay? Tiny risk, and target here, final target 161.8. Okay, problem is once you break above, we enter divergence territory. Possible divergence territory, but it's still bearish pressure, and we have no clue whether we're going to get this or that. And that's why if you're going to trade it, small risk, and you can give it a shot. Aussie cat, Kiwi cat, Euro Aussie. We simply need deeper pullbacks. Okay, we got the breakouts, we got everything. Quick reminder, if we break, where is that? This is the weekly chart. If we break below this zone, that would be convergence. Okay, and that's the daily part and daily time frame where we already got the convergence. We just need to see pullbacks in order to sell it. So don't stress about this situation. Don't feel like you're losing all the good situations. Simply wait patiently, guys. Okay, we have a cycle developing, we have a divergence developing. That means we can expect the pullbacks to be delivered anytime soon, and we're at the bottom. Let's just go to daily. We're at the bottom here of the previous swing. Okay, look at it. This is a fantastic zone. So another possible divergence trade here to be delivered. In that case, as we have more room up, we can allow ourselves to drop to 1 hour chart, and we can start looking for higher highs to be formed, and we can start looking for bullish hidden divergences to be formed to see some momentum and actually trade the pullbacks. Okay, again, this is aggressive, so less risk, don't go nuts, and then switching for the sells. Okay, Pound Aussie also managed to pay. We had here Delta setup also in the beginning of the, well, not beginning, it was Wednesday, I believe, and that was 30-minute chart if I'm not mistaken. So that was the setup. We had the bearish Delta pattern, and we said that we need to take care of this setup carefully as things started developing against cash out partial and move stop loss to break even, and now it's continuing lower, and we have a risk-free trade. Another idea not based on the software was to see the breaks below and then the pullbacks. We got the breakout, okay, this is the trend line breakout, pullbacks, and then continuation lower. This one with aggressive stop loss also pays at the moment, did pay, not pays, did pay. If you move the stop loss to break even, not sure if you would be kicked out, not here, but here. But in general, it's about putting money in the pocket, so that's perfectly fine. It doesn't matter which way you look at it. Now, if you're still holding the trade, this is 1 hour chart divergence. This is very possibly going to end. We have 15 minutes till the end of the candle. Could be a trigger for pullbacks. Okay, so in my opinion, if you're still holding anything, if that candle closes as it is, even if there are no ticks up completing the divergence, I would cash out. Okay. Besides that, if you want to be holding it for the longer run and you don't want to manage that position the way I suggested, alternatively, we have 161.8, which in my opinion is 1, 2, 3, 4, and then we need to see 161.8 for 5. That's also going towards the bottom here of the dashed lines. This is the channel of the weekly, which in fact is what we need to see at the end of the day, because we bounced and we need to see the bottom, top, bottom, top, bottom, top, bottom, until we get a breakout from either of the sides. So either protect it here or let it run towards the next zone, which is around 77, 76, 80. Don't stress about it. No need to FOMO. Okay, let's see what else. Well, Euro Kiwi, we need pullbacks as well. Same story as Euro Aussie. This is one great level that we can follow. Okay, something like that. Slightly higher, slightly lower, but this is basically the zone. That's pretty much the idea here. Pullbacks and continuation for the sales. No divergence yet formed, as opposed to Euro Aussie, which means we can see the price pushing lower still before the actual bounce. Pound Kiwi. Bounced, pushing lower. That was supposed to be wave number 5, 161.8. Almost reached, not exactly. The divergence is here, and that means we can now expect double wave correction. What I'm looking for aggressively is short-term pullbacks that could be possibly traded, and the way to do that is from this zone right here. This is basically the bottom, post 161.8 inverted. Divergence is also in place, so I'm expecting to see pullbacks and then continuations down. And again, why continuation down? Because we have this structure here that developed, and we need to see pullbacks now on the weekly chart. So that makes it bearish for me. And that's pretty much all, guys, about pound Kiwi. Kiwi yen. Very similar situation. Basically, we can summarize the week, and the heading here, the title would be wait for pullbacks. Okay, everything is running like crazy, and this is where people start getting emotional. Oh, I missed it, let's jump in, and then you lose. Okay, let it give us a good pullback, guys. Let it develop a nice setup. Let it come to nice levels, hidden divergences, double waves, other divergences on the lower time frames, and then we're going to attack it. Okay, no need to rush into it. If you didn't catch the first moves, now it's really not time to join. Okay, so QE and deeper pullbacks for me, ideal zone here would be this one. And again, double wave would be fantastic if the market would like to provide it. Oil not stopping for a second. Okay, this sell-off is continuing pretty strong. Now this divergence is gone, as we said yesterday. Possible false convergence to be formed, and that's pretty much one of the levels we're following, and this level comes from that cycle. So 61.8 of the previous cycle is now going to be reached. Sooner or later, I do expect to see pullbacks. Trading those pullbacks will be aggressive, okay, because you can see the momentum here, it's absolutely bearish. So only conservatively for the pullbacks. I wouldn't attack here divergences. It is a bit scary to do it, okay. We need to see reversal patterns, pullbacks, and then looking for these buys. But in general, if you want to be sticking with the conservative ideas, wait for the pullbacks to develop and only then attack the sells. Okay. Oil bearish remaining. Aussie franc, we had a request about that. Daily chart, weekly charts. That's the most recent trend line. Okay, we're almost reaching it. Hidden divergence starts to develop right here on this week. So if this week closes as it is, we're going to be inside hidden divergence territory. No divergences against, which means this is supposed to be a pullback that we can later on sell. That's weekly chart. Going back to daily chart, double wave forming, 100% cleared, which means next level is 161.8, and that's the next zone. 161.8 matching perfectly with the top of this zone. Okay. So far we have something that remains continuing divergence, which in our case is not enough, but we're going inside extremes here. So I would be expecting this to happen and then looking for the sells. Let's see what do we have on the lower time frame. There we go. 4-hour chart is under divergence already. And if we get pullbacks, one more push higher and then looking for the sells. Okay. In order for us to start looking for the longer term sells, we need to get reversal patterns. And by reversal pattern, I mean triple or special cycle to the downside and or convergence. Then hidden divergences and attacks. In case the move down starts from that point and we never get the high there. So that's all from me, guys. Any other questions? All right, seems like everything is clear. The new Euro Aussie currently bearish up until we reach 113. What do you mean no Aussie? You missed Euro dollar or Euro Aussie? Yeah, euro dollar. Maybe I said euro Aussie, but I meant euro dollar here. There you go. That's the 113 zone that I expect to be reached. Okay, guys. So in that case, have a lovely weekend. Enjoy, relax, refresh, and I'll see you on Monday. Cheers for now. Bye. Thank you.